Are you looking to invest in private companies? A great way to get started in the private market would be through alternative investing. In this next episode, my guest talks about what kind of companies they invest in, what kind of returns you can expect, and how quickly you can get started. Please welcome Kim Flynn. Kim, welcome to the show.
Thank you.
Good to have you here. So why don't you kick us off and tell us about your background?
Sure. I've spent my career focused on finance and product innovation. I worked at Morgan Stanley just out of college, out of Notre Dame. I'm a Chicago person, and I worked at Nuveen Investments, which is a leader in the municipal bond market, but they're also a leader in something called a closed-end fund. Closed-end funds are listed on the New York Stock Exchange. Spent a lot of time developing both traditional and alternative investments. And then I left Nuveen in 2016 to do something a little bit more entrepreneurial and founded an asset management business. And that platform is called XA Investments. XA Investments is focused on alternative investments. And we're part of an investment bank called XMS Capital, which is headquartered here in Chicago.
Cool. Yeah, thanks for the background. So let's dive into the specific assets our listeners can get involved with. I know one that jumped out at me was farmland, but why don't you kind of give us a list of everything investors can invest in?
Absolutely. I mean, a few years ago, liquid alternatives in the form of mutual funds and ETFs started to make some of these different diversifying assets available. So you have things like managed futures or commodity futures. And then that's on the more liquid side of the spectrum. With alternatives or private market assets, you're talking about less liquid or illiquid things. So farmland is a good example of a real asset product that can provide some income and some inflation protection. But at my firm, we focus on that entire spectrum of diversifying alternative assets. And we spend a lot of time working with asset managers, helping them launch new products because there's a lot of interest among individual investors to find points of access to investments that are not just stocks and bonds.
Gotcha. Okay. And then you're focused on alternative assets. So do you have a minimum investment size, and then is it limited to accredited investors?
You know, there's been a lot of innovation making these types of alternative products that are offered in the market much, much more accessible. So at lower minimums, you can find investments that have $2,500 investment minimums. Some products are broadly suitable without any restrictions, particularly in the private credit space. I think what a rule of thumb is that the SEC doesn't want individual investors to pay performance fees, and they might not be aware of that. And so with a lot of private funds, there are performance fees to align performance with the manager and investor. But in a lot of the retail products, you don't tend to see performance fees. And if you do, the suitability threshold would be accredited investor. Accredited investor standard is actually fairly doable. It's fairly low. So there are a range of products available for the average investor on up to accredited qualified clients or qualified purchasers. And the innovation that I referred to is really trying to broaden out who can buy these types of products because so many of us need the risk return diversifying benefits of private market assets in our retirement portfolios. These assets have long been part of pension fund portfolios, but they often aren't part of individual investor portfolios.
Gotcha. So you guys are charging more of like a assets under management fee?
So mostly financial advisors who are managing client assets are typically charging a managed fee, a percentage per year. And my firm, we don't actually manage client assets directly. The role that we occupy in the market is creating new innovative products to bring to market so that investors, financial advisors can,
Use them.
select one of, yeah, exactly, use one of the products. And most of the asset managers in the space like us do charge flat management fees. I'll give you a range of fees just to give you a sense. The fees are higher than ETFs or mutual funds. Most of these alternative products, the fee rates will vary from 1% on the low end upwards of 2%. Now, some of them do charge incentive fees, so you have to take a look at that, whether or not it's worth it. That's your judgment. But you do see higher price point. As you would expect, some of these private fund managers who are managing primarily institutional money, some of them are charging those institutions 2 and 20. So one of the other innovations, which is great for investors, is the price points have come down with DOL and a lot of changes in our industry. There's definitely a lot of fee pressure, price pressure.
Right on. And then for investors wanting to get involved, what are some of the advantages of working with you guys?
Sure. So, I mean, we think that a lot of individual US investors are over allocated to primarily large cap US companies. And so that concentrates client portfolios, and the driver of return is coming from one sort of set of risk. And so equity tends to be somewhat volatile. And a lot of these alternative assets basically have equity like returns with much lower volatility, much lower risk. And so that's obviously the goal. Some of our clients are income investors, and so they're saying, well, I'm looking for a higher overall portfolio yield. How do I achieve that? And they might be willing to take on more risk to achieve a higher yield. So a lot of the private credit products in the marketplace have current yields north of 8%, upwards into the teens. And so you're not going to be able to find that kind of yield if you're investing simply in treasuries or the Barclay Ag. You're
Right.
moving further out on the risk spectrum, but that's what clients, that's the option that you have. And so investors who are looking at some of these products might substitute a traditional fixed income exposure, like a high yield allocation, for direct lending or for asset backed securities. So these are kind of substitutions that people are thinking about, but clearly there are trade-offs involved.
Sure. Now, with what your clients would be investing in, is it kind of a mix between public and private companies? Is it all public companies? What is the allocation percentage?
So just giving an example, like
Mhm.
direct lending, like we talked about, that can be a mix of public and private companies. As we look at the banking sector today, banks are less likely to make loans. And so private investors have stepped in to that gap in the marketplace. And so it is a mix of public and private companies that are securing their financing in a different means. And that's really something that's been changing just in the last 3 or 4 years. That's private credit is one example. Another example might be private equity, which is basically even
Mhm.
late stage private equity. Those are all private companies, and US private companies have been staying private for longer. As we know, you have many entrepreneurs that follow you. And so if companies are staying private for longer, these types of alternative products are going to open the door to that opportunity. And there's a lot of wealth creation happening in the private company phase of the market. They're waiting longer to go public. And so this is a way to capture that part of the growth cycle.
Sure. You mentioned yields earlier or annual returns of about 8%.
Yeah. Yeah, I
Yeah.
think it starts there for partly because with interest rate increases over the last 18 months, now the risk-free rate is much higher than it used to be. And so these alternative credit products with more risk, they have to offer a higher yields, starting in the eights, moving into the teens, just relative because you can pick up incremental yield relative to lower risk products like the Barclays Ag.
Right on. Do you have anything that's, I wouldn't say high risk, but maybe very high risk that can yield some big returns? We're talking like mid to upper teens, maybe even
Oh, sure.
20%.
Sure. So there in the product market that I work in, there are an increasing number of private equity and venture capital funds. And
Mhm.
so though they are talking about high teens, low double digit type returns. The expected
Cool.
returns have to be higher because of the liquidity risk that you're taking. These are long duration type assets. If you're investing in private equity, you need to have an investment horizon of 5, 10 years or longer. Same would be true for something like farmland or real estate. And so the returns have to induce investment. And right now, we've seen a revaluation of companies and investments, particularly in private equity and venture capital in the last 12 months. And so I think there's actually, it's seemingly, if the correction on valuation has happened, it's an interesting point to look at these much higher returning. Now, this isn't current yield, it's not income. You have to wait and be patient to earn that return over the investment horizon, which can be 10 to 15 years.
Right. Right on. And then you mentioned you guys are more on the product creation side. So the money that's being managed, let's say a customer came in, wanted to invest $50,000 or $100,000. Who is managing that money?
Sure. So at my firm, we hire best in class investment sub advisors who have long track records managing in their area of expertise. And so that is a good partnership for the products that we create. There are a lot of alternative investment managers who've been institutionally focused and know nothing about the high net worth or the individual investor marketplace. They don't know how to serve those customers. So we can be a really good partner for institutional alternative firms that want to sub-advise. And that just simply means that they run the money, they manage the investment portfolio, and we do the education, we do the marketing, we do the product design. And so this is the advisor sub-advisor relationship is one in the mutual fund space that kind of brings you the best of the talents of the advisor and the sub-advisor.
Gotcha. Okay. Okay, here's a quick commercial break. So if you think investing is too confusing, too time consuming, or too risky, rest assured there is a solution. That solution would be Ticker. Ticker is a platform that helps you manage your own investments with confidence. So if you want to know what's a good stock, what's a bad stock, when do you buy, when do you sell, and how do you reduce risk, Ticker can help you with all the above. Now, if you want a little extra confidence before you buy or sell a stock, I'm going to show you a new feature we just added called the 4M Confidence Booster. Check this out. All right, so looking at Apple, you can see the 4M is in the center. And this is a tool that kind of walks you through the 4Ms, which are the margin of safety, which is the math part of investing, the meaning, which is the business model and how scalable the revenue streams are. The moat is how the business compares to other companies in the same sector and industry. And the management is a track record of the CEO. Investing is more than just math. You need to look past the math and look at the business. And if you can find a strong stock with a high 4M score, that should give you the confidence to move forward and buy that stock. Now, looking at Apple, you can see they have an 80 out of 100. If you can get above 80, that's actually really good. Now, don't take my word for it. I always say go to Trustpilot and see what our customers have to say, where we have a 4.9 out of 5. And if you're interested, you can sign up for Ticker for free. And then what does the process look like if somebody wants to get involved?
In terms of investors?
Yeah.
Yes. So I think that, education is really the gateway here to getting involved with a variety of alternatives. And as I mentioned, you can sort of dip your toe into the alternatives water by evaluating a number of thematic or liquid alternatives that start to provide people exposure to managed futures. Now we have several different crypto ETFs, that are launching.
Mm-hmm.
So there's a lot of alternative investment vehicles that are readily available in the wrapper that you're most comfortable. That could be a mutual fund, it could be an ETF. Other types of products, it used to be that you'd have to buy a private fund if you wanted to get private equity. Now there are SEC registered products technically structured as closed-end funds. It's a little bit of a misnomer because these products are actually sold in a manner, a continuous offering, but many of them are available through advisors. Because of the education, I think there tends to be a higher threshold in terms of how investors get comfortable. But there's now 200 SEC registered, what they're called interval funds. This is really the gateway to private market assets, and they're becoming much more accessible now than they were even 18 months ago.
Gotcha. And if somebody wanted to get involved, what kind of timeline would that look like to get educated, Make the right introductions within your firm and then start investing.
Sure. I mean, I think that some investors, depending on their acumen and their comfort, I would say that proper diligence might take a week because there's
Mm,
there's a lot of literature that's available to you now. Whether or not you have the time to set aside to do that, you can also talk with your tax advisor or your financial advisor if you want insights too. But there's a lot of resources. Think about the leading alternative asset managers in the US. So the likes of Blackstone, KKR, Apollo, they all have dedicated sections of their websites that they are calling, alts education, or their alts university. And so there's a lot of material and information, just a matter of how much of that you want to digest before you're comfortable, sort of making that first investment. But I do think that alternative investments have been relegated in the past to a small, maybe 5 or 10% portion of someone's portfolio. But with education, people would get more comfortable and might see using these types of products as a substitute
sure.
for some of the stocks and bond positions that they may be looking to replace.
Exactly. Another option, they kind of like another arrow in the quiver, if you will. They have another tool they can use to build their wealth or protect it at the same time.
That's right.
Cool. All right. And before we jump into the rapid fire round, what is one key takeaway you can give my audience?
Well, I think that when it comes to investing in alternative investments, um, depending on what your experience has been, if you're a real estate investor, there are real estate debt products, there's real estate private equity products. So pick your point of entry based on your own personal experience. Maybe your family has owned farmland in Kansas and you have some sense of familiarity there. There are a lot of ways to buy diverse portfolios of farmland, or small pieces of farmland. So I think that it's helpful to use your own personal experience as a guidepost to entering the world of alternatives. But it is worth it to explore, because US investors are so heavily concentrated, and we want to see people have strong returns with lower risks, just like endowments have done for years. But the way to achieve that is through adding a number of these types of diversifying elements.
Cool. All right, let's jump into the rapid fire round. This is the part of the episode where we get to find out who Kim really is. If you can, try to answer each question in about 15 seconds or less. You ready?
Ready.
All right. What is your favorite podcast?
A friend of mine, Alana Margulies, works at Eisner Ampner, and she has a podcast called Engaging Alternatives. It's terrific. I've talked about farmland investing with her. Check it out.
Nice. Good recommendation. All right. What is a recent book you read and would recommend?
Sure. I had the chance to meet Mary Beard. Mary is an author that wrote SPQR. She's got a new book out about the Roman emperor. So I think that if you've ever traveled to Rome, or,
Mhm.
passionate about that type of history, her books are terrific.
That's awesome. All right. The movie question. What is your favorite movie?
Favorite is probably Goonies, because I'm a child of the 80s. More current might be Oppenheimer.
Nice. Good choices. All right. More serious questions here. What is the worst advice you ever received?
I think I was a teenager in the 90s, and I think the advice was be diverse in terms of your or eclectic in terms of the mix of your skill sets and your activities and your clubs and whatnot. And I feel like that kind of stretches a person thin. So I played violin, I did everything. But I think now the advice is a little bit different. I think it's, go deeper and develop your expertise in one area. And that's another way to stand out. So I think that's a
Yeah.
little bit of a better piece of advice.
Specialize. Yes. That's good. All right. And what is the best advice you ever received?
Uh, read, read everything you can. That's what I asked my first boss at Nuveen when I was trying to figure out how to go up the learning curve. But he's right. In reflection, so many of us don't take the time to do that.
Good advice. All right. Time machine question. If you could go back in time to give your younger self advice, what age would you visit and what would you say?
Well, I'd go back to my 20s and I would travel and I would probably do more risky things, I suppose, in my 20s. I've got a son who's 16 and he's about to be 20. And I just really think that while we're young and have good knees, it makes sense to,
Yes.
ski hard and travel where you may. That's the best advice for.
Love it. Love it. I live that way personally. I see people, they get to 65, 70. That's when they retire and try to travel. And try is the key word. They can't really travel like they were
That's
hoping.
right.
So
That's right.
do it now. All right. And where can audience reach you?
Sure. xainvestments.com, or you can email me at kflynn@xainvestments.com. Look forward to hearing from you.
Awesome. Well, thank you so much for your time, Kim.
Thank you.